In this presentation, we will discuss the most complex method for tracking credit card and credit cards payment within our cash basis bookkeeping system. For more accounting information and accounting courses, visit our website at accountinginstruction.info. The reason this is a more complex method isn't because it's really difficult, but it's because we're deviating once again from a cash basis method and we're adding some more of the accrual basis information to it. In other words, we're going to enter the credit card statement into the system at the point in time the charges happen through the use of the credit card statement, and then we'll record the payments applied to it and we'll track then the outstanding balance. So this is more of a full service accrual basis that we were going to be working with for the relation to this account, this credit card account. We will first open up our QuickBooks file and credit card statements. So we're going to open up the more complex file within the QuickBooks data file, the QuickBooks 3. We should also have a backup that can take you close to this point in time, and so we can work through this together. As we do that, as that opens, we're also going to open up the credit card statements. So I'm going to go to the documents. We're going to go to 2019 and January. We're going to assume, of course, that these statements then are provided to us by the client. So we're going to say these are client provided documents for the credit cards statements. So here's a credit card statement for January. Right clicking on that, I'm going to open with Adobe Reader so we can open it and view it offline. Going to go to the February statement as well. So we'll go to 2019 February, and we're going to go ahead and go to the client provided documents, credit card for February. Once again, I'm going to open it with the Adobe Reader file. Here is our QuickBook file. We have the home page open, the open windows open. You can open the open windows by going to the View tab up top, or the View drop down, and go into the Open Windows list. Let's go ahead and open up our reports now. So if we go to the Reports drop down up top, we're going to go to Company and Financial. We'll take a look at the balance sheet first, changing the date range up top from 01/01/19 to 02/28/19. So that's January 1st to February 28th, 2019. Here's going to be our data. We'll now open up the other statement, the reports, the company and financial, the profit and loss or income statement report, changing that date range once again from 01/01/19 to 02/28/19. So here is our income statement or profit and loss. What we're going to do now is allocate the payments that were made for the credit card. If we go into, in other words, undeposited funds, we've got the 2 credit card payments that have happened to Visa. We're going to say that how are we going to allocate that now? We're going to use the most appropriate method, more of an accrual method, however, deviating from our cash method here to enter this information in more detail into the system. To do that, we're going to enter it into, say, a register type format. So our goal then is to enter all the data that would be in the credit card as the date the transactions happened, because that's going to be the most easy if there's an issue for us to tie back to when the transactions happened, and then to pay off those transactions. So in other words, if we take a look at the balance sheet, we will end up with a credit card liability, and then we'll make a payment to that liability. So we're going to have a 2-step process. One, we're going to enter the data from the credit card into the financial statements, and that'll debit expenses or put transactions into the expenses, and the other side will be a liability called credit card payment. Then we're going to see the payments being made on the bank statement because we're on a cash basis and we saw these payments made, and we will apply the payments to the liability, and that will cancel it out and result in a liability that will be equivalent to the outstanding liability. So this will make more sense as we go here. So first thing we do when we enter this process is we get our bank statements or our credit card statements here. Here's the January. We had a 0 balance outstanding. That makes it easy. If there was a beginning balance, however, that we have to enter into the system, we can enter that as one transaction and the other side could just go to equity. So I'll show you how that will be set up. If they're paying off the entire credit card, however, then that's the easiest transaction. So we have this much information that happened during the month, and they pay off the entire amount we're going to see in the first month. We'll see the second month we'll have that outstanding balance that we'll have to deal with where not the entire amount was paid off. So all we're going to do is enter this three information in a similar fashion as we do in a register for the cash register, this time using the register for a credit card. So we'll go back in here. First thing we need is a credit card account. So we're going to add an account by going to the lists drop-down, chart of accounts, and we're going to create an account for credit cards. We'll select the accounts drop up down here. We're going to say new, and we're going to make it a credit card type account. There's a special account for credit card type account. We're going to say continue, and then we'll set this up. I'm just going to call it Visa credit card. It's going to be a credit card type of account. If we have multiple credit cards, you could have sub accounts if you wanted to use that, make a credit card account and then list the credit cards that are sub, but hopefully we don't have too many credit card accounts for a small company. So we're going to say save and close, and we're not going to have this. Okay. Now we're going to go into the register, this register. You could do that. If I'm not in here, I usually go to banking and use register and select the credit card account by going here. But if you're in there, now it went here directly because I had the credit card account, I was on it. If I was not on the credit card account, I'd have to find it. In other words, I'm going to close these two out. If I went to banking, use register, then I'd have to find the drop down and say, okay, I want the credit card account, and then go there. Or a lot of people go from this point, I'm going to close this out, go to the lists, chart of accounts, and then just double click on the credit card account. Same thing, it'll take you to a register. It looks just like a check register, but just be aware, you're not in the check register. You're in the credit card register. Okay, so we're going to enter this data then, not in a Word document. We have just these three items, so January 5th, 500. So we'll enter that data. By the way, these aren't deposits, that's a leftover account. These are the transactions that happen here on the credit card statement. Okay, so we're going to go back over here. And we're going to say this is 010119. So that's January 1st, 2019. We don't need a type. We're going to type in the Lucky Linda's Casino. So now we get to actually type this in as a vendor, which is something we couldn't do the last couple methods we had. So we're going to actually track some vendors here within the credit card statement. So I'm going to type Lucky Linda's Casino. And so I'm not sure we should be tracking this particular vendor in our business credit, but we're going to say Lucky Linda's Casino and say tab, and quick add, going to be a vendor. And we're going to say 500. And once again, we're going to assume that the client said, hey, that's a personal expense, unless, it could have been meals and entertainment, but they're telling us it's a personal. So we're going to say, let's take that to draws and enter. Now in the memo, we might even want to put in the memo, hey, the client said this, or this is what we were told on this information. Any more information we give is good, typically, on the memos. Post office is the next one. So we're going to say the post office on the 14th. So I'm just going to say plus to the 14th. And post office we already have in there. So it's already picking up an account. The amount was for 160 and enter. And the next one was for Office Depot, I believe. Office Depot. So we're going to say that happened on 116. And we have Office Depot. And we have the 190. And that's going to go to Office Supply. So we're entering just like we would with a check register. It's that easy to enter the information in. Now the kind of tricky thing is, now if we go into the open windows here and we go to the balance sheet, we're going to say, okay, now we've got this 850 in the balance sheet, because what happened here is it entered a transaction, one, the expense side, and two, the balance sheet. So here's the credit card that we owe, which is now equivalent to what we owe here on the credit card. Now it was already paid, because we saw the payment clear the bank already. So here's the 850 that was paid. So now we see it here on the balance sheet. We see that the other side is in draws. Here's draws, where we put that Visa credit card for the casino. And if we go to the the other side, profit and loss. We can see down here that we have the other expenses, which was post office. Then we have something in the post office for the credit card, and I won't go on the other one, office supplies. So now what we need to do is we made a payment already. So if we go into uncategorized expenses, we have this payment that was made for the Visa credit card. I'm going to double click on it. And now what we're going to do is just apply this to the liability, and it'll remove the liability. So we put it into the liability Visa, and then we paid it off. So you can kind of visualize this as it's happening in time. As the credit cards happened, the liabilities went up, we incurred expenses, and we recorded a liability, which is now on the books for $850. And then later, we wrote a check, and now the check has been written. Now, we all see this at one time, of course, because we have the bank statement and the credit card statement. But if we think about this chronologically, well, the charges went up on the credit card. They owed $850, and now they're paying it. So the account is going to go into the liability account for the credit card, which is there. So we're just going to adjust that, save and close, remove it from undeposited funds, closing this back out, back to the balance sheet. Okay, and now we can see that this liability for the Visa account is gone. Why is it gone? Because the transaction made it go back down to zero. And that's why the balance sheet has its limitations. Like if there's activity in account, sometimes they go away. Accountants often use another report, by the way, reports, accounting and taxes, and go to a report called a trial balance, which is kind of like a list of accounts, same date range 01/01/19 to 02/28/19. And if you do that, then this is just a list of accounts, and it's got the balance sheet and income statement accounts, but it's got those debits and credits here. But this is kind of a cleaner way to look at it, because you just got all the accounts and the balances, and they give you the zero here, so that if I double click on it, I can see what happened. The charges went up, charge, up to $850, and then payment happened, went back down to zero. So this would be the full service way. It's a two-step process. So if you enter it this way, this would be the proper way to do it. It's not too complicated once you do it a few times, but you got to just recognize it's a two-step process to do this. We're going to enter the credit cards, increase this liability, and enter the expenses, and then we're just going to pay it, decreasing the checking account, and enter it into here. And remember, when we entered it into the checking account, all we did was go to the register. We went to, let's go to banking, use register, and we entered it into the register here. So now we're going back and we're adjusting it. But if we had this system set up from the get-go, we would enter the credit card statement first, and then we would go in here, and when we made the payment to the check register, now it's a payment that we're then going to apply to credit card payment, and then we're just going to make sure that the balance is what it should be. Okay, so let's do this again, and we'll see how this works another time. So we're going to go back into February this time and make it a little bit more complicated. Oh, I was going to tell you as well that if we went to this Visa credit card, and let's say there was a beginning balance we had to put on the books. So we'd say, okay, there was $1,000. Let's just imagine we had $1,000 charge. This was $1,000, but it was for prior purchases that they just had before we started doing the bookkeeping. Well, we could just put it to some type of equity account. So if that was the case, you want to put it into some type of equity account up top, so it doesn't affect the income statement, and it'll get your balance on balance, so that you can then move forward correctly going forward. Because what we're doing is we're drawing a line here. I'm not going to go back and figure out what they spent money on before we started doing the bookkeeping. We just want to make the liability correct so we can tie it in going forward. Okay, so then the next statement, February, same thing, is we're just going to enter this data, same information, same type of information, but now they're not going to pay off the entire balance here. So we're just going to go back to the register and enter this information. So Staples is the first one, and then Ted's Steakhouse. So we're going to go register. This one happened on 2/3, so I'm hitting plus to get to 2/2/23. Okay, this is Staples, And Staples is already a vendor, so Staples office supplies, 240. It's already going to office supplies. That's all we need, and enter. And then the next one, Ted's Steakhouse. So we had Ted's Steakhouse. I think we decided that that was a business related, I hope. So that's what we're going to go for. Business related, 216. And we're going to say this is Ted's Steakhouse, and it's for 530. The last time we entered was uncategorized. I think we said it was business related, so I'm going to put it into meals and entertainment. Meals and entertainment. And enter. And then we've got FedEx. So FedEx is on 2/6. Something the dates got kind of funny here. I don't know what happened there. That's okay. 2/6. We're going to say this happened on FedEx. Now it's a new vendor, so I'm going to type in FedEx. It's not popping up, so it's a new vendor. That's okay. Quick add vendor. That's a vendor. We're going to say that's for 130. And we're going to say this is like postage and delivery. Seems appropriate. Postage and delivery expense. Let's go with that. Does that sound all right? I think it'll work. And then we're going to go to Amazon. Amazon. And that's another one we're gonna have to get a feel for the client and say, what are you spending on Amazon? You know, and if it's personal and business, we got to say, okay, we've got to differentiate Amazon because we have no idea where to put that. If some is personal and some business, we got to have you need two accounts, two credit cards to be using, because that's gonna make, otherwise we're gonna have to ask you every purchase, and that's not good. So we're going to say, okay, and they're going to say, well, this is my business Amazon purchases, 430, and we'll assume it's something like office supplies now. So office supplies, if there is large, 430, we might have to ask, you know, what is it, equipment? Is it something, so there is kind of like an arbitrary dollar amount that you'd kind of have to get a feel for to see if you want to ask about it or not. And then, in other words, if it's immaterial, then putting it into office supplies probably not going to hurt. And then Office Depot is the last one. 190. So we'll put that into 190. And that's going to be office supplies again. Notice office supplies, we're hitting that one a lot. So if office supplies starts to be your biggest expense account, then that might look funny. But that's okay. So here's what we have now. It's at 1,521, 1,520. So it's off by a couple pennies. So that's we'll be okay there. It's off by rounding somehow. Actually, it's not off by rounding. This is $1 off. I'm going to change this 1 to 190. And so we did that on purpose so we can verify our balance there. 1,520 is verified to this 1,520. Okay, so then that account will also be reflected once again on the balance sheet. So now if we go to the balance sheet in the open windows, balance sheet, we see that we have now 1,520 for February now. So we imagine what happened, charges happened, and we just put it on our account, just put it on our tab, and then now our tab's at 1,520, and we imagine that then we're going to pay off the tab. So we already paid it off in the credit card, it went to the bank statement, and we put it into undeposited funds. So now we're going to go into undeposited funds and reallocate that payment here because we're paying off the tab at this point. So we're going to go back to the profit and loss report, and we'll go into undeposited expenses. And then we have this second credit card payment there. Now we paid off the tab, but not the whole tab. And so now we only paid 1,030 of the tab, which was 1,520. So that's what happens with credit cards. So we said, oh, man, we'll pay off some of the tab. And so we're going to put that to the credit card up top. It's going to go to the credit card now. Save and close. And so we've taken it out of uncategorized. Now it's not an uncategorized. We put it to the balance sheet. But now there's still an outstanding balance here of 490, which should match our statement. So, well, if we saw the next, once we make the payment, we had 1,520 minus what we paid means that we still owe 490. The next statement that we get then should have a beginning balance of 490 plus the activity of the outstanding balance and then show what is owed. So if we do it this way, this is the most proper way to do it if you're going to actually track the credit cards. But it's a two-step process to do that. And you just want to just double check this account that it works. And if you do it this way, the advantage here is that over the other ways is not only does it track this account, but it puts the information in the system by date. Meaning if we go to the profit and loss, we have the information that went in here by the date that it went in there. So here's the credit cards. It's not like it's all in there at the date we paid it. We're not just putting it in there at the end of the month or whenever we paid it. We're putting it in there as we incurred it, which is nice. Not only that, but we can also go to the vendors up top and go to the vendor center and note that a vendor like Amazon is now on the books because we're entering the vendors, whereas some of our prior methods, we were just putting the vendor in the memo as one payment because we weren't entering it into the vendor. So those are some advantages of this method. It really is, if we're tracking on a full accrual basis, the best method to do. But that two-step process can cause confusion because we are going into more of an accrual method. So you just got to measure the pros and cons on which methods to use. For more accounting information and accounting courses, visit our website at accountinginstruction.info.